Hi, guys. Very good morning to all of you. So, we warmly welcome all of you to Chapter 4 of Upsurge webinar series. So, Upsurge webinar series is a webinar which was initiated by the Student Circle of Economics and Decision Sciences at NSBM in order to redefine and uplift the Sri Lankan economy. So today, the chapter 4, we are focusing on shifting gears in Sri Lankan economy. So before moving on with the discussion, I would like to make this an opportunity to introduce y'all the guest speaker for the day. He is the country head, managing director, and chief executive officer of Fitch Ratings Lanka Limited since January 2010. Prior to that, he also has had a short stint at Dialog Telecom PLC, the largest telecommunications company. He was a senior consultant with Ernst & Young for a period of 2 years. And also he was a consultant to Securities and Exchange Commission on the Capital Market Master Plan project. He has also facilitated projects for clean development mechanism and bid process management for public-private partnership projects. He has 13 years experience in investment banking as Group Managing Director, Chief Executive Officer of First Capital, a boutique investment bank, which has 5 subsidiary companies offering services in primary dealing, asset management, corporate finance, stock brokering, and money brokering. Prior to this, he has also worked at Commercial Bank of Ceylon as a treasury dealer for 5 years. He holds a degree in civil engineering from the University of Mumbai in India. He has also worked as a site engineer with the consultancy of JV Nippon Koei, Electrowatt, CECB to the Samnalavawa hydropower project, both in the power station and dam site. So we warmly welcome Mr. Maninda Vikramasinghe, the country head, managing director, and chief executive officer of Fitch Ratings Lanka Limited. Hello, sir. So,
hello, Andrea. So thank you for the introduction. And
yes.
are we all set?
Yes, sir. So I have a quick reminder before the discussion starts. So I would like to remind all of you, if you have any further clarifications or if you have any issues regarding the discussion, you can just feel free to chat in the chat box. You can direct your questions to us using the chat box. Thank you. So over to you.
Right. So good morning, everyone. I believe all of you are students. So it's great that you all have organized this monthly meeting. I think it's a very good idea, and I wish you well going forward. So today it's chapter 4, and so I've chosen to speak to you about the Sri Lankan economy in relation to what we probably need to do looking ahead. I mean, there is no point in analyzing the past. So shifting gears is essentially, I've drawn a parallel to when you want to overtake somebody in front of you, you shift down a gear and you overtake. So it's with that in mind. So the idea is that the economy is lagging behind and it is time to shift gears. I mean, if one was to, as students of finance and or economics, you'll understand that probably Sri Lanka should have been doing this long ago, but better late than never. So I essentially will have 3 parts to my discussion with you. I cover it in the form of section on investment. Second one would be on reforms, and then the economic climate. These are sort of 3 broad areas that I would talk to you about this morning. What I propose is after each section, if you like, we can pause a little, maybe take some questions. And at that point, because very often at the end of the presentation, if you were to look at some questions, you might have forgotten the beginning. So we'll let's kind of, after each section, we'll pause, and if there are any clarifications or questions you may have, we'll do that and then move on. Um, um, so before I actually get to the first section, um, I just thought of a little story, and I thought more like a loosener for the morning. All of you, it would have been probably been nicer if I could have come to your campus and addressed you in person, but in these days we cannot do that. So the only thing left is our sense of humor. And so my story goes that there was this engineer who had built a car, and his managing director was extremely pleased because it had all the advanced electronics and new technology and all of that. And he was very keen to, basically unveil this car. And while they were making plans to unveil, they realized that the they were trying to wheel the car into a showroom, and they found that the entrance was the car was probably slightly, maybe 2 inches taller than the entrance. So there was this chief financial officer who said, well, we can maybe break up the entrance and put it back all together, and it should be all right. That's not a big cost. Uh, and then another guy who was the painter who did the paint job of the car said, "Oh, look, it'll it'll probably damage part of the hood, but that's okay. We can fix that. We can repaint it. After all, you're only going to showcase the car." And now the CEO was getting a bit frustrated because it was a crucial time, and the guy who was the watchman in the showroom came along and said, "Well, you don't need to do any of that. My suggestion is let the air out of the wheel, and then you might be able to push the car in because it's after all only 2 inches taller, and then you can reinflate the tires." So the reason for the story is sometimes you have all these expertise, and the solution actually can be quite simple. I am not suggesting that what I'm going to talk to you about is simple, but I'd like to look at myself as the watchman. I'm basically giving you a kind of an overview just to make mostly provoke your thought. It's this is not a lesson on economics or on capital markets. So I am actually an engineer, and the rest is actually work experience. So that's what I'm going to share with you. So from there, getting on to investment and investment strategy. Typically, any person who looks at investment, at the end of the day, any economy needs capital. So this is the way capital flows. What I put down here is a way capital flows. By the way, I'm assuming that some of you know these terms, you're familiar with these sort of things. I hope I'm not pitching it too high, but in case there's anything that you don't quite follow or terminology you don't understand, we can always clarify that at Q&A time. So in a typical investment strategy, one thing that you follow, and this is a thumb rule for everyone, it's what's called arbitrage. So in this instance, just to give you a typically a simple illustration, low versus high return. It means uh, relatively, if you're looking at assets, you will find that there are opportunities where the returns are high and opportunities where the returns are low. Now, typically, when you say arbitrage, it means that you can, for example, let's say now you can borrow from a bank at say 7%, and you can invest in the stock market giving you 15%. Now that is a low versus high return. So this is a simple example. And then you have macro. What is macro? That's your macro economy. So this is where you look at low growth versus high growth. So you'll have some countries in relative terms that will have low growth, and in some countries in relative terms you have high growth. So this is exactly that, so the macro strategy, it means in a nutshell, you will invest, you will, if your investment is in a low growth economy, you might move part of that into a high growth economy, hoping to cash in on the growth and therefore capital appreciation. So that is one strategy. Then you have markets. So you could be heavily domiciled in your investment in within a country, and you also then would realize that you take all the risks of that country. So what you do then is you want to diversify your risk, and then you look at international markets. So you would look at markets in other countries. Example, it could be an investment fund that invests in Sri Lanka, but when you realize that returns in Sri Lanka's markets are low, you might move into other countries and invest in their stock markets or their bond markets. So that is a diversification of your markets. All of this, you have to look at risk and reward. So your returns, higher returns do not necessarily come free. They would come with some sort of risk. So the higher risk you take, the higher reward. So you have to also understand that higher risk is something that you want to keep in mind. You don't want to put all your investments into higher risk, because you could lose your interest, you could lose your capital. So you always look at perceived higher risk for reward, but you will also approach it with caution. So these are all parts of what is called investment strategy. Now, no investment strategy is complete without an exit plan. And so typically an investment has an exit plan. Like if it's a deposit, well, you know it matures, that's your automatic exit. But if you look at um, investment in stocks, whether it's private equity or whether it's listed equity, any company that's private can list the company, which means you sell part of it or all of it at a public listing. So that's one option. You can also just sell the entire company to another party, or you can liquidate the company. So these are all options of, you can liquidate an asset, for example. So that's an exit mechanism. So if, let's say, you bought a house, you can sell it, right? That's an investment and you can sell it. Um, Same way you can do a liquidation of a company after you settle all your liabilities. So broadly, this is the way any capital would flow into a country or a corporate or a instrument. When I say instrument, you must have heard, you have treasury bills, treasury bonds, you have commercial paper. In international markets, you will have securitized notes, you will have medium term notes, you have CDMs, which is called combined debt obligations. Sorry, CDM is combined debt mortgage. Then you have CDOs, which are combined debt obligations. These are all very much financial instruments, and this is mechanisms of raising capital. Now, I'm giving you this backdrop because some of these are what gets considered when you make investments, and Sri Lanka badly needs some of it, very much in relation to what you call FDI, foreign direct investment. So before we get on to the nitty-gritty of investment, um, I just thought I'll take you through some current scenarios in prevailing market returns. So this is a yield curve. Yield curve is, as you know, Sri Lanka issues 2-year, 5-year, 10-year, and 15-year treasury bonds. And these are the current yields on each of those bonds. And so across the length of your issuances, there is a return. And you can see the shorter dated bonds have a lower return and the longer dated bonds have a higher return. So we call this a kind of what is called a normal yield curve. And these are the prevailing bond rates. And you can see that the blue line, which is say the rate as of 13th August versus the green dotted line 1 month ago and the orange dotted line 6 months ago, you can see there's been a small shift in the yield curve. That means the rates have gone up. I hope all of you can see this graph as clear as I can see it. Please let me know otherwise. And this is the yield for the international sovereign bonds that Sri Lanka has issued and that trades in the Singapore exchange that is called SIMEX, Singapore International Exchange, Mercantile Exchange, SIMEX. This is where the bond trades. And this, you can see from July 18 to January 20, the yields have been somewhat steady, not too volatile. But since a little after Jan, you see a major spike, and that has sent it up to almost 24% in yield terms, that is yield to maturity. Then again, you'll see in July, it seems to have come down somewhat, touching 10%, but almost immediately it seems to have moved up again. Clearly, what this shows is that there is let me just point this out to you. You see this spike and you see this spike, right? And opposed to, you see that and that. So we've had a big movement here and it has come down, and then a relatively smaller movement. I'm saying relatively as opposed to 24% here. You're talking of a high of about maybe 21. And now it's at around 17, so which is around here. Now, what this means is typically this pattern of movement in market yield means uncertainty. And that means it's volatile, and that means perceived risks are higher. So this is, I mean, I put this for you to understand how people read risk. So if I didn't know much about, Sri Lanka, and I'm an outsider, one barometer I would look at is this volatility in this yield curve. It tells you that there is some uncertainty. So this gives me an idea of perceived risk. So remember, we were talking of risk here. That's this one. Sorry. So we were talking of risk here, and this one is that clearly the volatility in your yield curve gives you an idea of what the risk is like. So, or at least that there is some perceived risk. Then, moving on, this is a 10-year US Treasury note. This is issued by the Federal Reserve in the United States. And over the past 3 years, the yield in this one. So you can see, again, I will try to show you that. You can see this yield has kept on going down. So uh, at a bottom, maybe you can see this is almost like 0.5%. So you can imagine US interest rates at 0.5% in around a period of February to about July, where the interest rates bottomed out and there were a lot of issuances. And this is when what you call the Federal Reserve cut interest rates. That's what's called their policy rate. So you can see that there's been a spike. Again, it has moved up to little above 1.5%, but is back again at around 1.5% now. So relatively speaking, US Treasury note volatility is much low. It has moved from half a percent to 1.5%, very roughly, in that same period when we saw massive spike. So relatively speaking, the US Treasury 10-year bonds volatility is much lower. Now, if you are an investor, remember I was talking to you about a strategy and I was telling you about low versus high return. So you can see Sri Lanka bonds, you can get high return, right? If you go now, you're looking at about 17% yield to maturity, and you look at the US note, which is at 1.5% right now, 10-year bonds, low yield. So theoretically, capital should be flowing from US treasuries into Sri Lanka bonds. But for some reason, it's not happening. And that's what I meant by perceived risk. So as we go along, we'll see how we can kind of unbundle some of that. And uh, let's move on. So I spoke to you about this is the yield curve for rupee bonds, and this is in Sri Lanka, the local rupee bonds, ranging from 2 years to 10 years, and that's the yield curve. This is the sovereign bonds that Sri Lanka has issued in international markets, and this is the current trading price in the Singapore exchange. This is the US Treasury yields, which again, which trades in the US exchange. And these are currently some of the yields of the US Treasury notes. And this is the stock market in Sri Lanka, right? And let me show you. You'll see the stock market. See, this period, it's come down. This period, it's come down. And in fact, probably almost all the way down here. And if you look at in the other way, this is clearly up, and this is a period up. So again, you can see it's very volatile. So essentially, this period where it has been dipping is from about 2011 to 12. And from about 2013 to about 2015, it has been moving up, uh, relatively speaking, in this period. But then again, it has dipped from about 2015 all the way down to about 2020. It has been actually pretty low. In fact, at 2020, it was at an all-time low. But since then, in all of 2020 and 21, it seems to have moved up. There was a correction, and it is again moving up. So currently, the stock market is looking relatively healthy. So again, you will see that I'm sure if you talk to investors, some of them will probably be doing what I spoke to you about, low versus high return. Remember, I gave you an example. You can borrow at cheaper rates, 7%, and that means you can leverage an asset and invest in the stock market. So if you keep on doing it and the stock market keeps rising, then you what we typically call there is a bubble forming. So there are different ways of easing a bubble. A bubble nobody wants, because when the bubble bursts, asset prices crash and you have consequences. And there have been global disasters in that scale, and there are countries which also had similar issues. More recently, we had a global disaster in 2008, and closer to Asia in 1997, we had what is called the East Asian crisis. So, so that so this is essentially, I just showed you typically what an investment climate is, and those were all connected to financial markets. Don't forget that when we talk of investments, it's not only in financial assets. You can also invest in real assets, and we will talk about that. This is a number that we look at in terms of GDP. So again, this is Sri Lanka's GDP, and you can see on the whole, they are kind of positive, but you can see from about 2000 to about 2011, we've had a trajectory which is reasonably upward. It's okay, albeit it has had some dips and troughs, but general direction has been it's going up. And if you look at periods from about 2014 and going down, say coming towards 2020, from 2014 to 2020, you can see the direction actually is downward. So remember, I was talking to you about the macro picture. Now, typically, lots of people would have probably looked at Sri Lankan economy as being very positive in the period ranging from 2000 to 2012 as being positive. So if you were looking at the macro strategy, you would invest in Sri Lanka. And it's probably right. We did see investments coming into Sri Lanka. And if you look at the trajectory since then, it looks like it's going the other way with a negative growth of 2020, which is here, which is actually an all-time low. Well, that's not unusual. That actually is the case for a lot of economies in the world, particularly in 2020. So this may be what we call an outlier, but if you look at the overall strategy, overall GDP numbers before, you can see it has been moving down. So having talked about, we talked about the um, different strategies that one looks at before investment. And here we have now come to a stage where we can look at what do you invest in. So you have, remember the yield curve I showed you? So you have government bonds, government securities that you can, yields are relatively lower, and again, they are very liquid. So if you're looking at international investments into these, it's typically in an investment point of view, the there these amounts. So you know that foreigners can invest in Sri Lankan rupee bonds. So only thing is that it's volatile. They will move them at very short notice. That means if you feel the risks are high, if you feel that the GDP, the growth numbers are going down, you may decide to move. Then you have syndicated loans. These are again moderate returns, and these are in the form of loan. And in terms of long-term investments, typically these are your opportunities, and one is the stock market. And when you say stock market, the Colombo Stock Exchange that you see as an indicator is your secondary market. That's where existing stocks are bought and sold. So that's your secondary market. Your primary market for stocks is your IPO. When somebody raises capital, either in a private equity or in a listed equity, that's your primary market. So we have stock market where capital flows in, but that's already traded stock, unless it's an IPO. Then you have private equity, which is privately owned companies that raise money through rights issues, or you can have, they themselves could do private placements. And then you have sovereign bonds. So I'm just talking of this in a, as a investor from the outside coming into Sri Lanka. And I'm especially just talking about that because, as I told you in the beginning, FDI is a very critical number, and Sri Lanka badly needs that for a lot of reasons. So I have given you a backdrop to how international capital would flow. So we do have capital flows into our stock market, but currently, if you actually look at it, a lot of the foreign investment in stock market has moved out. And you can understand why, because I told you the GDP numbers were looking downward. And if you look at the sovereign bond trades, it was volatile, and which means there was some risk. So that typically means flight of capital. Now, private equity is a channel in which capital can flow, and there's a lot that can be done in this space. Um, but I will, it's got everything to do with scale. If you look at scale in Sri Lanka, um, you know, if we get foreign direct investments of ranging, say, $2 billion a year, uh, that's about what we can absorb into our economy. If somebody actually brought, say, $30 billion into Sri Lanka, they won't know what to do with it. So it's about scale, and typically we do have private equity funds, and they do look at sometimes minimum investments of, say, up to $5 million, and going up to even $100 million. But very often they don't get that kind of investment opportunity. So if you bring $100 million into the stock market, you can move this market all over the place, and it, because our markets are not that liquid. So and then you have the sovereign bonds. As I told you, very high returns. If you invested in a bond now, you're looking at 17% yield, but typically that would be a high risk investment. Now, I'm also commented here, like uh, these comments, ideal for capex and cash flow long term. So these are in the point of view of somebody issuing. So typically, you issue sovereign bonds because you want it for capital expenditure and on the issue side. So if Sri Lanka issues these bonds, it's for capital expenditure, and it's long-term capital. Usually they are 10-year bonds. But and of course, then you offer a higher return. Originally, these bonds offered, I think, about 7.25%, and now they are trading in the secondary markets at 17. So, so as I said, these all have their drawbacks, and this is a key area. Like I told you, we have opportunities to invest in real assets, and and I have just listed out some of them. Now, the drawback we have is that how many of these ventures have we been able to attract capital in? So and IT enabled services. Typically in these areas, energy, I have a energy reform slide, which we will talk about as we go on. But energy, we have private energy companies, but in terms of percentage, it's very small. Now, the strategy is to get this percentage up. That means for enabling for private capital to flow into the energy sector. So I would put that as a good sign. This one. Highways. most of the highways here are where government has raised money through international bonds, and then they have invested in building highways. As you probably have already experienced, you traveled on the airport expressway and the southern expressway. These are with borrowed money, and when you build assets with borrowed money, you have to always repay your capital and interest. uh, I'm not saying that when you bring capital in any other form, you don't pay. But if you were to look at foreign direct investments coming in as equity, well, equity is always your return is on dividend. And dividend here is after you pay for all your expense. So if it's, for example, an energy company, and you make an investment in an energy company as equity, that is buying stock, the shareholder gets a return only after you pay for all your expense, and if there is a profit, then you declare dividend out of profit. On the other hand, if you invest in a bond in the same energy company, you will get a limited return and the capital irrespective of the expenditure of the company. This is the main difference. So if I was someone who was raising capital, ideally, I would like to have a good balance of both equity and debt. And that's so it is really, I'm talking of in many ways a lot to do with, when I say foreign direct investment, it is how do we attract equity capital into Sri Lanka. We don't have much space to attract debt capital because, as you know, we are struggling to pay debt, and more debt you borrow to pay off existing debt, you have a what you call a debt pile up, and eventually you get into major problems of how to repay that. So currently in Sri Lanka, we need foreign direct investments in the form of equity. So this is an area where we can do better and actually look at attracting foreign capital. And typically, how do you do that? I think there was a segment of a expressway which I believe goes from Kalania to Talawatugoda, which has been signed up on the basis of build, operate, transfer. That's a BOT project, which means the builder brings the capital, builds the highway, he will charge a toll, and the toll will be his return, basically. So he will depend on us who use the highway, who will pay a toll, and that would be his long-term return on his investment. So that would be a good way to essentially attract capital. Then, in the port we have terminals. The port has been already built, and the terminal in the what they call the CICT terminal is with private capital. SAGT, which was built earlier, about almost 20 years ago, was built with private capital. And they are looking at the eastern side terminal and the western terminal also to be built with private capital. So that's encouraging. Now, these are avenues to attract FDI. So these actually are opportunities that will attract FDI. And if you look at airports and airport as in the form of logistics, we have a airport that was basically again borrowed and built, and currently it's probably not being used to its full potential. However, I think there lies the opportunity for us to create, say, maybe a logistics hub there. And other one that we have private capital, private capital has flowed into is in IT and IT related areas, and these are encouraging. Particularly, I think since of late we've had HCL Technologies that has made a fairly large investment, and I think they essentially have attracted capital flows, and this is a very much private sector led investment opportunity. And then you have we have real estate, which attracts capital into residential apartment, be it hotels, theme parks, golf courses. All of these are opportunities of investment into real assets. And then we have also opportunities for education, vocational and technical. Again, I will talk to you a little bit on these as we go along. These again are what I spoke to you about, in other words, in attracting capital into these. So typically, like I said, on public-private partnerships, you can attract energy, into energy projects and highways. As I said, again, we can have toll roads. I spoke to you about that. We could, in fact, we have to look at infrastructure in railways, and it's really actually lagging. So, if you look at all of this, and you need capital, and this is what I meant by saying that when you are talking of capital, capital as an investment opportunity flows when the climate is right. So I will talk to you about what that climate is. But before that, we need to do some work, and that's the reform agenda. So again, these are some opportunities we have in terms of strategic advantage. We have 4 submarine cables that go right by the side of Sri Lanka, and those are for data, and therefore opportunities for KPOs and BPO and data warehousing are huge. We do have some operators here who use this what you call competitive advantage, but we can do more. And these again are opportunities of investments into hotels and education, and of course modern agriculture, which we've hardly touched on. Now, okay, so before we move on to reforms, I'd like to ask you whether you have any questions at this point in time. Okay, let's see. Among Sri Lanka. Right, let me just quickly. So, in considering literacy among, it is a very low level, but investments are really important to accelerate. Is this low financial literacy a barrier? What is your idea? Right. What are factors that might lead to positive and negative growth in GDP? How can investments help achieve positive growth? COVID-19, economic situation uncertain. Some economists suggest to invest in industry like food and beverage. How beneficial is it to invest in the international market compared to investing in domestic market? Fitch Rating recently noted that sovereign risk has increased. How would you explain this? What can the reasons for sudden downfall in Sri Lanka? So, right. Okay. So yes. First question on financial literacy. I would say Sri Lanka, as a country, we produce a lot of accountants. I mean, I understand Chartered Institute of, that is CIMA, which is a London-based institute, operates in Sri Lanka, and ACCA operates in Sri Lanka. Is we do have a lot of graduates in accounting. So the probably far more than what the economy actually needs. And why is it so? Because if you look at, I have a slide on education. We don't have opportunity. We have very high literacy, in the sense we do have about 300,000 students that sit for A level, and only about 30,000 go into our university. So what do the others do? A lot of them actually go into courses in accounting and a lot of marketing, and you have a whole bunch of institutes that run courses. I'm not saying it's a bad thing, but we need to reorient that. But the answer to your question is that though we are literate in a lot of other ways, financial literacy is low, and that explains why we don't see much growth in retail investment. When I say retail investment, typically the mutual funds. We have seen some growth in the last, say, 4 or 5 years, but mutual funds were first floated in the 80s. So in the span of 40 years, we have really seen very little growth. And to me, everybody thinks bank deposits and finance company deposits are safest investments, and that is due to financial lack of financial literacy. I would also add that we we have not created enough opportunity to take capital market instruments into the outside world, meaning other than outside the Western province. Uh, Whereas if you look at the reach among banks and finance companies, it's quite amazing. Some of the banks have even as much as 300 to 400 branches per bank. And then you have six big banks that all have probably 300 branches plus. So you can see the reach. And unfortunately, our capital market participants have not had that kind of reach. One way of course, doing it is not to go and open more and more branches, but to use technology to reach out. And yes, your answer is right. Financial literacy can improve. The other is right. So when you have, in terms of the question is, uh, positive and negative, what are the factors that might lead to positive and negative growth in GDP before and after 2011? How can investments help to achieve positive growth? So I won't go into too much detail on positive and negative in that period of 2011 to now, but a lot of it is to do with policy, and one of the problems of Sri Lanka is inconsistent policy, and that's something which a lot of industry people and policymakers are also talking about. That policy seems to shift from one regime to another, and that there clearly lies a reason, and the market shows that. How can investments help to achieve positive growth? So when like I said, if we can, one of the problems Sri Lanka has in the past is the sovereign has been borrowing money and basically trying to build infrastructure, whereas we some understandably you have to do that, but there are a lot of areas where, like I mentioned, in energy, in even in highways, you can attract private capital. That means from the outside, because Sri Lanka does not have capital in that kind of volume. But if you look at typically a highway project, $250 million. If you look at a power project, maybe $50 million. I mean, large scale power projects. So this kind of money needs to come from the outside. And we have not done enough to actually attract foreign investment into these projects. So if you have foreign investment into these projects as FDI, like I said, as equity in these projects, though that capital stays within the country, and then you will have a government that will have capital to run everything else. See, if governments are going to run business as well as infrastructure and as well as services, because at the end of the day, don't forget the entire public service is serviced by government. So what, when you say budget, all the money, taxpayers' money they collect, a good part of it goes to pay previous debt and interest, and the balance goes to paying public sector salaries. So there are clearly a lot of positives in the reform program, which I will touch on. which basically tells you how you can achieve positive growth. And yes, the answer is that if investments do flow, you will see growth in the economy. And what we really lack now is this foreign direct investments to trigger that growth. I'm not saying that you can't trigger growth from within, but then it'll, you're looking at maximum 2.5 to 3% kind of growth. But with the kind of, if you look at our inflation rates and interest rates together, if you look at that, then if you're looking at what you call real growth, which is very nominal or sometimes negative, and Sri Lanka has to grow on a sustained basis at anything above 5% for it to make an impact in the economy. Okay, so uncertainty is financial market is a better suggests to invest in India, right? So yes, COVID-19 is something that has affected the entire economic sector, and those who are in export seem to be doing a little bit better than those who have been in services, and for that matter, maybe even in domestic manufacture. But uh, you in a way, what you're suggesting is right, but the way you set about on food and beverage here and agriculture is Sri Lanka needs to modernize, and it's modern agriculture that we need to invest in. And when I say modern agriculture is, if you look at some countries, some advanced economies, what they have done in with modern agriculture is quite amazing in terms of output and about resources. So we have, Sri Lanka has no shortage of water. We have about 10,000 to almost 20,000 man-made tanks, of which we probably only use about 10. The rest are, fallen apart. And we have two rainfalls, one from the northeast, one from the southeast. So we have 22 major rivers flowing across the country. So all of this is water, and we need to, and our ancient kings built all these tanks. What we need to do really is to conserve the use of that water, and there are modern techniques to doing that, including even the way we grow rice. We grow rice in the most traditional method that our forefathers did, and there is a lot of learning to do in terms of what modern economies have done. And I was surprised to know that Australia grows rice, and they grow rice essentially for a Japanese market. And so these are new thinking, and certainly there are opportunities for that, and we need new thinking uh, compared to, yes. So currently, if you look at the stock market return, that's not a bad market to be in, but as you know, it's the liquidity is very, very poor. So it's volatile, like you saw in cycles of roughly 4 years. It goes up and down, and in some cases even shorter. So the volatility is why you might find that you want to also look at international markets. Now, when you say international markets, typically you have to also know where, and it means you need to also know a little bit more about risks and return in those countries. So answer is yes. If you're a large investor, you will want to be diversified in your investment. So that's an option. And then Fitch noted Sri Lanka's sovereign risk is increased. Let me take this little later if we have some time. What can the reasons for sudden downfall in Sri Lankan stock market? Right. So typically, if you anticipate corporate earnings to be low, stock market comes down. Now, I'll give you an example. Last year, in the early part, you would have noticed that lending opportunities, particularly from the time of the tragic Easter Sunday bomb. We saw economy slowing down, tourism sector taking a hit. So all tourism related companies that ran hotels and they are listed in the exchange, you'll see their stock market prices falling. Then you would have seen a little later the bank stocks falling because banks were not able to lend money into these projects. They had non-performing loans and credit growth slowed down tremendously. So essentially, if you looked at the sorry, the 5 years from about 2015 to 2020, kind of on the whole, the growth was slowing down. Interest rates were moderate. I won't say low, they were moderate, but credit growth was slowing down. So overall sentiments were not so great for the stock market. So stock markets move up or down based on perceived returns, and it's all to do with cash flows of companies. So um, yeah, so let me move on now. We don't want to rush the last bit. So, like I said, as a in the reform agenda, we are going into the reform agenda and looking at investments and reform and energy strategy. I would look at, say, uh, existing now in a reform program. You look at your existing part of your economy, which is let me get this going. Okay, see this one, right? This is your existing part of your economy, and we already have thousands and thousands of hectares of planted tea, rubber, and coconut and spices. Now, clearly, what is lacking here is the value add. So you would have seen in tea auctions, they'll say certain teas in a particular plantation fetched record prices, and you'll see a kilo of tea what 450 rupees. That same tea in a London supermarket probably is at 10 pounds, which is about to 2,200 rupees. So we are selling it here at about 450 rupees, and somebody is retailing that in London at about 2,200, 2,500 rupees. Just as an example, I am, I'm just plucking some random numbers, but what I want to illustrate is that we are really producing a commodity here, tea. We are not doing the value add here. And where we need to do reform is to look at value add. So investments into value add. This is what I mean by increase the replanting area and investment into value add. Now, so you have a company like say Dilma, for example, they are doing value add. You have a company called HVA, they are doing value add. I mean, I'm not talking of who is more successful than the other, but attempts to value add. So value add here means you blend tea. Sri Lanka, as you know, Sri Lanka tea has a premium brand. It's actually a now a globally recognized brand for good quality tea. So if we are to leverage, right, when you say, if you talk of a vehicle and you say Rolls Royce, you know it's a premium brand and you're paying a premium price for it. Now, that should be the case for Sri Lanka tea. So how do we get more from a value add? We should be doing what people are doing outside of Sri Lanka. They are blending teas, they are packaging it, and they market it. That's what we are not doing. So we need to invest in that. Then you can enhance existing industry. And I must say, in rubber, it's much better. We have one of the largest solid rubber tire manufacturers in the world in Sri Lanka. That company is now owned by the largest tire manufacturer, that's Michelin. That's an amazing story, and I will. It's a subject by itself, but so the rubber value add is much better, and we do have roughly about 60% value add in rubber, and it's so much so that area where rubber is grown, they're trying to increase it. So actually replant and increase the rubber area because we need it. We actually right now import rubber. Then spices, as you know, there is a lot more value add going on. There's a lot more awareness, particularly after COVID-19. There seems to be even a greater awareness on spices. So that's a good sign, but we have to do much more. The key thing that I have not touched here really is this one, 40 billion to replant the tea. You know that our tea bush, the original tea bush, is now about 130 years old, and that means we've been pruning and they sprout, prune and sprout. This goes on, and essentially the replanting is very poor. Only in some of the privately managed companies they have been doing systematic replanting, but a large area of the tea is not. And the estimate for replant is about a 40 billion rupees that needs to be put to do this. There is a lot of problems in tea because the bulk of the tea land is owned by the state, and they have only leased it to management companies. So when it comes to 40 billion capital into replanting, question is who is going to put it? So normally the owner has to put it, and managers to that will only implement. So there lies a problem, and it's something which we have to ask ourselves. Do you want to keep growing tea? Because don't forget, all of these are labor intensive industry. So labor is, there is a shortage. And do you want to prioritize and either get your tea replanted and up and running and get more value add from it, or plant something else? So these are questions, and this is what I meant by saying reforms. So this one is a huge requirement, SOE reforms. If you look at some of the numbers and the loss-making SOEs, it's mind-boggling. And, you know, for example, you'll see People's Bank, Bank of Ceylon, they make profits quite big, 11 billion, 10 billion profits, but it gets all nullified with, say, one airline loss 30 billion, cumulated losses I think are about 30 billion. So all of these profits get nullified with that one enterprise. And you have, you know, all these utilities are running at losses. So we have to take a call. We can't go on doing that. One successful program that ran and has benefited is the privatization of SLT. The state owns 51%. The rest actually is owned by the outside. So there's foreign direct investment of 45% there, and not FDI, right? So we can channel FDI if you want to. So this is one such opportunity, and the public owns 4% of SLT. So it's a listed company, and therefore is subject to governance and transparency and timely disclosures. So that's a good example to follow in an SOE reform model. All you need is the political will. Let's move on. I already touched on this, but I want to quickly run through. You can see Sri Lanka in terms of, this is about, this information is a big data. This could be actually worse, but I'm just saying this is the pricing for average unit price for a household, and see where Sri Lanka is positioned. We are positioned here. Let me show that to you. We are here in compared to other countries on either side. Now, see how that shifts for commercial unit price. So for commercial unit price, we are here. And you see on either side. So we really are charging a lot more for commercial electricity unit. So what is commercial? If you rent office space, shop space, the rate you pay is at the commercial rate, right? And that's very, very expensive compared to the rest of Asia, if you really like. And then moving on, if you see here, again, let me highlight this. So we are here in relation to industrial, right? So not bad, but there are countries and states which are offer much cheaper. Look at Vietnam, for example, is one of the cheapest. So clearly it shows that energy has a competitive advantage, and we need to revisit our energy policy. And that's actually what I say here. It's a competitive advantage. Energy is not a luxury. It's almost a requirement now if you want to progress. So we have a public utilities commission that basically looks at the energy mix. And then you have a government that can go and look for public-private partnership into the various different energy forms. Fortunately, there now seems to be a policy towards green energy. So good for you, green energy, green university students, to take a good look at that policy. I think it's good for the country. It also depends on how well they implement it. And I hope they get their competitive advantage right. And hopefully, if it's right, we should see this shifting towards the left, and maybe even that more towards the left, and this one definitely towards the left, to be competitive. So that's just to tell you about energy. Tourism strategy. This is an area, we have to go past our traditional tourism. So, as I said, archaeology beyond cultural triangle. We have a lot of heritage. I mean, just to give you an idea, heritage, for example, houses. There are huge amount of houses, plantation bungalows that need resurrection. They can be developed into absolute opportunity, and this is where private capital can flow. I don't think that that there is a shortage of private capital. It's just that under these circumstances, some of them are reluctant to invest. I mean, just take an example. Look at what has happened to tourism. So from 2010, after a 30-year conflict, from 2010, we saw a very steady rise in tourism. So you had big brands that made investments into this, and built big hotels, big resorts. And then you come to 2019, and we man-made disaster happens. Then we have another disaster, which is of course beyond our control. But now for 3 years, potentially what a net earning of about $4 billion has been off. So how can you, in a situation like that, you can't really expect people to put money into tourism. However, if you take a long-term view, I think Sri Lanka is a wonderful opportunity. And that's what we need. That's the message we need to give. These are long-term investments. They are not like your typical 12-month or 36-month return on investments. These are anything from 8 to 10 years or even longer. So you have to talk to the people who have that kind of appetite. And see, if you recall, the 10-year bond, the US 10-year bond, was giving you roughly a 1.5% yield. And that yield is for 10 years, and billions of capital has flowed into the US to buy this bond. Now, surely we can attract some 10-year money that will give you anything more than 1.5%. And it should be attractive. So we need to put the rest of the climate right to do that. So we will discuss that as we go on. So these are your opportunities. And as I said, activity led. So this area, I think, is the key to growth. And y'all are the young people. This is where we are really now need to grow our business. And the opportunities are amazing. So that's where we should head. And so this is what we are naturally endowed, right? 18 major rivers, 10,000 man-made tanks, 1,300 kilometers of coastline. We have elevations of 6,000 feet, tropical rainforests, we have forest reserves, we have sanctuaries. So all of this to be put in a perspective of how can we sustainably, the key word is sustain. Of course, we have forests, we can log all the trees and make a killing. But then what happens to our environment? So that's what I meant by saying you need to take a policy needs to take care of all of that. And yet you have to find ways and means of sustainably making use of these naturally endowed opportunities. The others I think we have already touched on, so I won't go into that. Right. This is a really a very, very important one and maybe even close to your heart. I've just plucked some of these numbers. These I think were based on 2017. They could be here a little bit, maybe now a little bit different. But this I got from the net. I'm sorry, I'm not current on this, but I think it gives you a good idea. Why do I say education strategy and why is education a good important sector? Any economy is driven by its human resources. So if we are looking to drive economy at 6% growth and in different sectors, which we spoke of, right? We spoke of in our strategy, we spoke of power stations, highways, So if you look at all of that infrastructure wise, then we are looking at residential apartments, hotels, and so tourism and all these areas. You need trained, skilled human resource. And we look at modern agriculture, again, you need resource. Not like getting technology, you need people who know how to operate technology. And then we have IT skills. So all of this requires human resource. Hence, university education, technical education, and vocational. Here's the story. 300,000 roughly, you have 300,000 A-level students. I'm assuming all of them pass at least. I mean, there might be some failure, but on the whole, that's probably a high number. 25,000 go abroad for studying. 30,000 go into our universities. The point I'm trying to raise here is we happily say 25,000 go abroad. And I'm sure a lot of your friends, relatives are all either gone to Australia or they are in Malaysia or in the United States or in the UK. Now we've come to a ridiculous stage where they are all going to do medicine in Nepal, Bangladesh, uh, Russia, Ukraine, name it, and they're gone. So, what are we doing here? We are roughly remitting about $3 billion a year. This is simple math, right? Assume that you have 25,000 going abroad and they follow a 3-year program so your average person does a 3-year program and a year, your fees is about $40,000. That's $3 billion a year. So that's a hell of a lot of money. And I'm saying as a strategy, if we can create a healthy higher education environment, that 25,000 does not need to go abroad. Okay, 5,000 might go abroad. We need to actually do that as a strategy. How do we give them the skill sets and all of that in this country? Then you're not remitting this money out. Now, of the 30,000 that enter our universities in Sri Lanka, about 15,000 do arts, meaning essentially non-science. Another 5,000 roughly do commerce and management. Medicine, engineering, veterinary sciences, agricultural sciences, all of that is about 5,000. That's your rough breakdown. How much of these graduates do you think can we employ? This is the question. That's the question that a reform program must address. Now, I forgot to mention this. I did mention to you earlier that we have CIMA, CCA, CIM. You name any acronym and we have that. I don't mean NSBM. NSBM is a fully fledged university. I'm talking of these institutes that run courses, and they are like mushrooms, they're all over the place. You have affiliated programs that run. I mean, these are the more recognized courses, but then you will have some which are, I mean, I have not even heard of. You don't know what institutes these are. Nevertheless, subscription means you're taking money out. So again, I'm just saying we need to. It's. I'm not saying that you have to disable these things or something, but we need to reorient our students into the performing sectors of your economy, meaning where they are required. That's the key element, and that's where the strategy must follow. So as I said, one of the things is to look at how do we attract private capital into this, and how do we make that uh, go into in a proper regulated environment. You don't want like mushrooms these popping up all over the place. So one of the things is that uh, how many schools teach science and have labs? Actually, it's paltry. How many how many people have opted for non-science streams due to lack of opportunity? So you're going to a school in let's say in Polonnaruwa, maybe they don't have science as a stream there, and maybe they don't have lab opportunity. I'm just saying, maybe Polonnaruwa is not a good example, but summer, maybe there are other provincial capitals where you will see this opportunity is not there. So you almost at a very young age, that student is already moved into a environment where there is no science. So from then on, that person has no option, because as you know, if you don't have a science background, it's very difficult for you to, at a higher level of education, suddenly move into science. So a science, his life cycles virtually start from grade 6 and upwards. So this is why I say we need to really rethink our education model. And then we need to look at how, because the government, as I said, budget is already looking at public sector, which is huge. So how can we increase uh, education capacity where with limited resource? The way answer lies in attracting private capital. So we really, now it's not unusual. For example, New York University has a campus in Abu Dhabi. They don't offer all the courses, but they offer some of their courses. Monash has a campus in Malaysia. So why can't we do that? Why can't we look at some of these big brands and attract them to on a public-private partnership? Actually, have universities here, and then you will address all of that capital outflows and reorienting students into the viable sectors of an economy, right? So we just took overall as a strategy of some areas where we can bring reforms. And as you saw with that reform, I've answered some of your questions also. That's how you bring in FDI, and that's how you also get growth. So let's just take a quick look at, I don't have too much time, but let's see what else do we have in questions. Right. So ease of doing business, I have addressed that in the climate area. So let's talk about that. Good long term, right? So I hope I have answered. With the education industry in Sri Lanka growing, can it potentially be as good a long term investment as tourism? I would say, in fact, education, looking at the numbers, education can be very lucrative as an investment. And the numbers, and it's almost like a no-brainer in terms of what people are willing to pay. If you're willing to pay to go to any US university $40,000 a year, and if we can bring some of these big brands into Sri Lanka, I am almost certain sky is the limit in opportunity, because you ca- I mean, if you market that same joint venture at half, say at $20,000, I'm talking of still big money as a return on investment. So opportunity is massive. To answer your question, I will. The others, I think I've already answered. I will take that question on the sovereign risk and commercial banks at the end. But and this question on ease of doing business, I will answer that as we go on with the next slide. So far, so good. I hope I'm not rushing you through these, but in terms of managing time as well, we need to do that. Uh, but we can take maybe a few more. Maybe we can get into a live session for a couple of minutes at the end, so that I can maybe address some of your any other questions that you may have. So we looked at how investments flow, what is the thinking behind it. We looked at how we can facilitate some of these investments into different sectors of the economy. And now we need to prepare ourselves to making it. How do we take away some of the risks in the economy? How do we make them long term? How do we get people to think long term? Remember, I was telling you we need to get people to think that Sri Lanka is a place where you can invest your money even with 8 to 10 year period where the returns are good. So there has to be a communication strategy, and then when we say managing threats means managing risk. So we will look at all of this in the next section. Right. So I have perceived this as what I call ambassadors, and we have what I call anchor tenants. So these anchor tenants are your ambassadors to get this message out. Remember, I was talking to you about value add in rubber. So we have these companies, these are operating in Sri Lanka. Trelleborg, originally Pacific Dunlop, now they go as Ansell Lanka, and Lodestar. These are companies that operate here in rubber value add. Trelleborg and Pacific Dunlop, they do a lot of these rubber gloves and rubber related products. Lodestar makes solid tires. They are owned by Michelin, and Michelin is the world's largest tire manufacturer. And if you see their story, uh, this man, entrepreneur, Pringers, he came to Sri Lanka in the 1980s with 300,000 euros. He has exited that investment probably with millions of euros. That's an amazing story. And if he can do it, I don't see why we cannot attract private capital like that, and long-term investment. So there is an excellent ambassador. So like that, I would say we have ambassadors who can talk of their own story. Then in leisure, in tourism, we have these brands in Sri Lanka: Shangri-La, Movenpick, Hyatt Regency. Hyatt Regency, of course, hasn't yet materialized, but they are a contender. Sheraton. Hilton, Novotel. These are all operating in Sri Lanka. So they are your ambassadors. They are those brands being in Sri Lanka should attract other big brands. And I have not listed here, but JW Marriott and Ritz-Carlton have a project in Sri Lanka. But like I said, if you look at the last 3 years, they are on a wait and see kind of approach for now. I mean, but that is to be expected. But take a longer term view, and definitely tourism is growth sector. Component manufacture. We have already a plant here set up by Mahindra and Mahindra. And I cannot see why Sri Lanka does not need to get into vehicle manufacture. We don't have a domestic market for that. But where we can compete is in component manufacture, and we can do a lot more in that. So Hambantota Industrial Zone, I hope, will be promoted for this because there's nothing like a industrial port. So if you have an industrial zone next to it, and you have people who can add value to, say, things like motor car industry, component manufacture, um, your turnaround times are much faster. And this is why I say that that's how you make these ports viable. So that's an opportunity. In IT, we have Virtusa, and now it's bought by a big US company, and London Stock Exchange owns MIT. So these are two brands. I'm not saying we don't. We have HCL Technologies, who has made a large investment in Sri Lanka. So I'm saying that we need to do more here. Um, this, I must say, Sri Lanka, uh, from what IT specialists say, is a classic example of why our education sector needs to step up. So the requirement to have a proper IT hub, we need ideally about 20,000 graduates coming, IT graduates coming out, and that's the kind of level of employment then that you can build into large concerns. So if a large IT company comes in, that's the kind of seat they look at for software development or whatever. Now we produce, I believe, something like 4,000. I could be wrong, but it's a paltry number compared to what we should be. So if we are to promote large IT companies, we would have to import this human resource. So interim period, that's fine, but in the long term, I think our education policy has to revisit this. So again, I remember I told you we have the submarine cable, so that enables BPO, KPO. They are the lower end of it, but there are niche markets, and I'm not talking of what you call services and that kind of thing. But HSBC has a huge center here. WNS has a center here, and Copa Lamba, which is a KPO service. So these are existing companies, and the fact that they operate here, they can be your ambassador. As I told you, port terminals are operated by SAGT and CICT, again to attract capital. Here are two good examples of operators, and they are running at full capacity now. And telco was one of the areas where Sri Lankan government got the policy right, opened up those markets, and as a result, we have global players like Axiata, Airtel, and Hutch operating in Sri Lanka. 21 million population, we have three huge mobile operators here. Something must be right. So this is why I meant by saying the policy changes can attract players and capital, and with that, foreign direct investment. So into an investor climate, these are some of the things they look at. If you want to make investments, this is what they look at, going deeper into that. And so you I for want of time, I'm not going to go into a lot of detail, but you can understand you know when you say stability, exchange rate and interest rates become a key component. What drives your exchange rate? Your exchange rate is driven by the kind of trade imbalance that we have. So we have a depreciating currency. Historically, Sri Lanka rupee has depreciated 5% every year. So what that means is roughly in 10 years, it's kind of lost half its value, something like that. So uh, in that sense, we need a stable currency. We need interest rates that are competitive so that our enterprise can borrow at these rates and make investments. If not, if the interest rates are too high, then you will find that opportunity to invest, and also what you call the word would be feasibility of investment becomes lower because you're paying higher interest and capital. So we have to look at this, and that comes from macro stability. Macro stability comes from how you manage an economy. Apart from the policy, it depends on how you run your income and expenditure. So 60% of our budget goes to paying off existing debt. So it's only balance 40 can fund healthcare, education, whatever public sector that salaries we pay, all of that, and any other development that we want to do has to come from that. So we are running very high deficits. We are an outlier in terms of peer countries, and Sri Lanka's deficit is very, very high. FDI, why I keep talking of FDI, that's the way we can bridge this gap. We can bridge a trade gap with foreign direct investment, and we can bridge our budget also the same way. Remember, I talked to you about infrastructure, what the government spends on infrastructure. We can actually do a PPP where the government burden is smaller. And I will just ask you a question, which we can discuss at the end. Just think about it, right? So we want to say that we want to build a maritime hub. Now, in building a maritime hub, we can put 25% equity. Now, typically you build a terminal, and let's say the terminal costs $100 million, and 25 million we put in equity. So SLPA puts 20% of that equity as an investment. What is his return after all the expenses are paid? If there is a profit, they will get a dividend return on that 15% they own. Right. Look at the big picture. If you build terminals 1, 2, and 3, increase your port capacity and make a logistics hub where there is a smooth and efficient transport of container, and then that's your infrastructure for a maritime hub. Look at the big picture and tell me what is better. We will Your answer I will take at the end. Um, so moving on. So political stability, law and order, legal redress, and court system. So in case of dispute, now I come to ease of doing business. It's a very important one, and we have successfully put a lot of roadblocks into what was probably a single point of entry. And the Board of Investment was that the BOI Act gave them a lot of powers, but by omission, we have allowed that to be carved up. So now you don't have a BOI that actually is a single point of entry. You have to still go environment ministry for environment approval. You have to go to the electricity board for electricity. You have to go to somebody else for water. I mean, this goes on and on and on. And uh, I think there is a lot of attempt to address this, and the somehow we don't seem to have the political will to get this single point of window at the BOI to get going. We have a good guy there at the moment, so it's a pity if we don't use his know-how into improving this. So if you look at countries like Bangladesh, Vietnam, uh, maybe I mean, in effect, okay, these are a little bit more advanced, but Malaysia, Thailand, Indonesia, they came out of a 1997 East Asian crisis. They attract huge amounts of cap. Bangladesh was not part of that, I'm sorry, but Bangladesh would be a classic example of South Asia, but the others are from the Far East or East Asia. They attract huge amounts of FDI. And one of the key things is they have relative macro stability and they have ease of doing business. So they have created, and it's not a rocket science. I mean, Sri Lanka was one of the first countries to set up what was called the GCEC, Greater Colombo Economic Commission, which then was called the BOI. And we have had experience of that. And I know, I'm not really quite sure why. We know the benefits of having it, and I'm not sure why we don't quickly and urgently get that going, and then we will almost automatically see the country rising in the business index. And this is something to do with political will. Of course, more interventions means, uh, you well, it's I don't want to say it, but it means you have to go and meet individuals, and for good reason they have this in place. And it's high time we broke these barriers down, and for the greater good of the country and the economy. So then, for investor climate, of course, infrastructure is important. We have some good infrastructure, like I said. The submarine cable is a good infrastructure. Telco infrastructure is good. We have two companies that have set up fiber optic networks. One of them is SLT, the other is Dialog. They both cover virtually the whole country. So we have a pretty good electricity distribution channel, though our energy costs are high. All we have to really do is revisit the energy mix and the energy policy. So all of that becomes your infrastructure. And the land is again a policy item. 80% of the country is owned by the state. This land that everybody, you and I, buy and sell are what is a little bit of a measly amount that is privately owned. And of that, again, a large part of that private land are in estates. So they are all 25 acres plus plus. So, we have to revisit land policy. There is no point and for an economy, there is no value add in buying and selling land. It's the same commodity. The value proposition is what you utilize the land for and the value add you bring. Just give you a simple example. You can grow rice on an acre, and roughly what the yields are and how much money you can make. In that same acre, if you put up a tire manufacture plant, I'm just giving you a rough example. Uh, in reality, it may be not like that, but if you do put up a tire manufacture plant, the return on that investment is far greater than what you do uh, than growing rice. I'm not saying that means tomorrow you go and undo the rice and build a factory, but all of this. So this is what I mean by saying the right zoning. You have to do that, and with that you make land available. And for Sri Lanka to grow, we have to start looking at investment into other areas. So, I've talked of traditional areas, I've talked of growth areas. We need to build resources and encourage investments into where we have competitive advantages, right? So, Okay. So all of this has to have a good communication strategy. You see, if you don't communicate this to the rest of the world, you're not going to get any FDI, of that matter, any investment. And so therefore, highlight your competitive advantages. What is it that you have to sell, that this is a good country to invest in a medium to long term? We have a steady taxation policy and framework. What are the entry and exit barriers, if there are any? Ideally, you should not have any entry barriers. And of course, entry barriers should be there for non-legitimate business. But there should be very little entry barriers into areas where you're looking for competitive advantage. And there should not be exit barriers, in the sense, like I said, any investment needs an exit plan, and the better exit plan you have, you will attract more investment. That's actually true. So if you put all of this together and some of those reforms into action plan, definitely, and communicate this, definitely Sri Lanka will definitely do much better. Now, I just want to run quickly through. This is a from 2000, year 2000 to 2021. This is the way the currency has moved. In 2000, the rupee was probably about 65 or 70 rupees to the dollar, and now it's just above 200. So that's what has happened to our currency, right? Well, almost, yeah, three times over, right? So that's in the span of 20 years. And you see the volatility, or the graphical line, the line, the line graph actually tells you the year on year change in the exchange rate. Look at how volatile it is. And if you, that's what I meant by saying on the average it's about 5%, but it's massive volatility. And that's exactly what I mean by risk. And you have to remove that risk. I'm not saying when you say remove that risk, you just, it becomes all a straight line. But this volatility has to be more manageable, and that's what attracts capital. So with this, we go into, we've done communication, and we go into managing threats. So I spoke to you about exchange rate and managing that. That's an external factor. So there are some of those things, like exchange rate movement due to COVID. You cannot help it because it's not something that's in your control, and that's going to happen. It has happened in other countries as well. The fact that those countries seem to have lots of reserves, so they use their reserves to stabilize currency, stabilize an economy, whereas Sri Lanka has hardly a reserve to talk about. In fact, there is a huge discussion about it right now. Uh, that's another subject by itself. But so we can't afford to intervene like that. But we have other ways of managing it, and in the long run, we have to. So this is what I meant by saying internal. So interest rates you have to manage, and we have a runaway fiscal deficit which we have to control. Political stability is relatively good. We have a little bit of labor unrest. That's not unusual at a time like this, but it cannot escalate. If you have it escalating, and it means you're not addressing the problems, and it means if a lot of labor unrest gets resolved when you resolve some of these other areas. When you open up an economy, it creates job opportunity. When you have FDIs, it puts money in the economy so people get paid better. All of these things contribute to less unrest. So this is how you must set about it. And disaster management, right? Floods. We kill our agriculture with floods. Then there's nothing much we can do about, uh, you know, uh, a drought, right? So the way you can manage a drought is to conserve and better utilize your your stored water. We have, I mean, if you look at in the north and the east areas, the amount of tanks we have, and true, we do have environment impact, but we do waste a lot of that water as well. Floods, some of the floods are man-made, some of them, of course, are due to climate change. Landslides, again, we have areas prone to landslides. We can identify them ahead. We can discourage dwellings in these areas. We can do stabilization. All of this can be done where, yes, you may have an upfront capital down. You have to invest capital in it, but in the long run it pays, because the damage from all of this is minimized. So this is what I mean by saying disaster management. Disaster management, as we know, is after the disaster happens, they come and tell you this happened and that happened. That's not absolutely useless to an economy. Disasters need to be prevented or minimized. That's what managing risk means. So basically, that kind of sums up what I wanted to tell you. And we can now, if I have actually run a little bit beyond my allocated time, I was given 1.5 hours. Now I've taken 1 hour, 45 minutes. Want to say thank you for actually inviting me over. I hope you found this useful. We can maybe take maybe a live questions if you like. I will also answer that question I said I will take at the end. Let me first take this off. Right. Uh, I hope I'm visible to you all. And we could maybe do a quick, if time permitted, we could do a quick Q&A, if you like, live. Okay. So in the absence of any questions, I will.
Yes, so we have
Sorry.
received one question.
Okay.
So the question is, what advice would you give anyone who is getting into investing in times like this?
Right. Um, Unfortunately, in Sri Lanka, uh, we don't have what is called shorting a market. This is a very technical term, but you know what is called short sell. In the US, where it is possible, you have opportunities where even when a market is falling, you can do what is called a short sell of the market. So they have enabled that with in a technical sense, it's called borrowing securities. So you borrow the securities to make your settlement, but essentially you short the market. That means assuming that something is at 100 and you expect it to fall to 80, you sell that asset at 100 and you buy it back when it goes to 80, and you make a 20 unit profit. That's called short sell. In Sri Lanka, we can't do that. All we can do is to, like I said, the arbitrage, which means low interest versus high interest. So anybody entering Sri Lanka into the stock market, my advice is um, cash is real. So if you're investing in financial assets, that's what you need to follow. If you follow a herd in investing in financial assets, you become part of what's called a bubble. So your real sector must grow. Now in Sri Lanka, the stock market moved up mainly because a correction was needed. It means a lot of the stocks were trading at below net asset value. and now they are probably more at net asset value. But don't forget that uh, sectors like banking, they are long-term investments, because banks, for their credit to grow and credit expansion and all of that, for that to happen in the next cycle is probably 18 months away. So you have to look at investments now with that kind of horizon. Banks have reported heavy profits for 2020. That's on the back of lendings that they made earlier at very high rates, and the deposit rates in 2020 virtually crashed. So that's what they made. They made huge margins, and that's how they made money. Now that's not something that is sustainable. So if you want to look at sustainable stocks, I would again say tourism sector related stocks are long term. Banks would be to medium term, and uh, export-led companies are definitely a good investment. So I hope I answered the question in entering the stock market. Of course, if it's a foreigner who's entering our stock market, he would look at all these other external things in terms of exchange rate, the risks in terms of whether country gets into a default and all of that. So that's a different ball game. But if you're a person who's just looking from Sri Lankan point of view, looking at the stocks, then yes, that's my advice. Any other question? If there is no other question, then I will take that. I will answer that there was a question on banking in Sri Lanka. I could do that.
Yes, sir. At the moment, we have not received any more questions. So, yes.
Right. So the question was, yes, so we did have a report saying that our banks are vulnerable, and the reason for that is that if you look at the assets of the bank, so on the liability side you have deposits, and the banks raise bonds, right? They raise bank bonds. So that's on the liability side. On their asset side, they have loans, so they have a loan book, and they also have investments. So they invest in government of Sri Lanka bonds, that is local rupee bonds. And also, since of late, they've been investing in Sri Lanka's international sovereign bonds. Now, as you know, the international sovereign bonds are rated at triple C, and that's not that far away from default in terms of, if you're looking at a rating scale, it's 4 notches from default. So, I mean, we do have a crisis of sorts. When I say crisis, it's manageable, but it needs the right policy, and you need a strategy of medium term and long term. So in the short term, you can borrow from Peter, Paul, and Mary and pay that. I mean, it's possible. Up to now, that's what we've been doing. But the critical part really is FDIs and all of that. So till then, there is a perceived risk, and uh, our banks. So what we say is, we are not saying definitely default, but it's a scenario. If the country defaults on the sovereign bond, then we, at default, you have to take mark to market losses of that bond in your books, because what it means is at maturity you're not going to be paid. So when you take that loss into account, it has a bearing on the capital of the bank. So that's what we are saying, as there is a sovereign risk. And that sovereign risk has got elevated because some of the banks have actually bought uh, ISBs. Remember, I told you in the beginning, investment strategy part, and I told you at 17%, current market rate was about 17 in dollar terms, 17% in dollar terms if you buy Sri Lankan bonds. So a great opportunity, but with that, there is risk. So risk and reward. So the risks are high as well as the rewards are high. So far, the bonds that they had, and that was last year and this year maturity, it was paid. So they are happy, but the the rating agency still maintain perceived risk, and it's at triple C. It has not reduced, and therefore the perceived risk still prevails in the banking system because our banks are holding on to these bonds. So I don't want to dwell too much into it, but it does have implications of a further crisis in case there is default, because don't forget the banks have dollar liabilities also. So how do you meet if your asset side is not, if you're not being paid, how do you meet that dollar liability? So this is where risk comes from. I hope I have answered that question. I would like to ask you, I asked you a question. Does anybody have an answer for me?
So we got some inquiries saying that the question was not be clear. So can you
Okay,
just,
okay,
yeah.
okay. Yes, let me, I will, for time, I will pose the question and the answer as well. But so the question was, right now, a lot of our infrastructure, the government seems to want to build and own, right? They seem to want to do it themselves. That means government finds the money, government invests in it, and it owns the whole thing. But the question I asked is, if we want to build a maritime hub, what is more important? Build capacity and the logistics infrastructure for that, and market a maritime hub with, say, capacities of 15 million TEU, that is container equivalent, or do we want to buy 15% of a terminal and earn the dividend income that you'll get from it? So the question I'm posing is, look at the big picture. This is my answer. Look at the big picture. The big picture is, you can own a terminal and the terminal might have capacity of only 2 million TEU. But when you build a larger terminal and multiple terminals and increase capacity, you earn from 15 million TEU more traffic, and thereby indirectly earn more money, because you have port charges, you have taxes that you will pay for services that they will use in Sri Lanka. You make multiples of what you can make from 15% of equity that you own in one terminal. So actually, I have now given you the question and the answer. I hope that helped.
Thank you so much for the explanation, sir. So, yeah.
I take it that we have no more questions, and I don't want to actually take up more time. I'm sure they're dying to get the hell out and go and do something else now. Uh,
I
so thank you
don't
very
think
much
so.
for asking me over, and I hope this chapter 4 was useful.
Yes, so today we discussed about shifting gears in Sri Lankan economy. Actually, it was so helpful. So we would like to thank Mr. Maninda Wickramasinghe, the country head, managing director, and chief executive officer of Fitch Ratings Lanka Limited, for giving us a good explanation through clear examples and illustrations. I hope that this was so informative for all of us. So, and also I thank the audience for being an amazing audience, for directing us questions, and for sharing this knowledgeable experience with us. So, thank you so much, sir, and thank you so much for the audience. We are planning to meet you soon with another informative session of Upsurge webinar series, which will be beneficial for all of us. Till then, take care and stay safe.
Thank you and all the best to you all.
Thank you so much, sir.